Hello and welcome to the Stock Planner channel. We're an educational channel sharing our ideas. They say the stock market, when it reacts, it overreacts, or that every reaction is an overreaction for the stock market. I don't know who said that. Maybe it was me. Wait a minute. I remember who said that. Zip Trader. He always says that every reaction is an overreaction. And he's primarily a day trader. I've tried that. And I've lost lots of money on the day trading. That's why I'm a swing trader, a lot more calmer. But he uses the same indicators that I use, and the RSI and the MACD. And I'm not sure about the stochastics, but kind of an interesting young fellow. And he produces a lot of videos and is very helpful. A lot of helpful hints. But yes, he's primarily a day trader. And he does like the stocks that a lot of people are currently hyping. AMC, the end is coming, and he has a great deal of followers, a lot more than I got. So all this talk about overreaction, I'm going to talk about tonight Amazon, which is a stock that I haven't traded much because it's trading currently at $3,327 per share. Add 2 zeros to that, and that's a lot of money if you buy 100 shares. If you buy fractional shares, you can buy. Yes, a person with a small account can buy a fractional share, but holy cow, this is a hard one to trade with if you only have $5,000, unless you use options. Just had earnings, and the earnings were fairly good, but it did some guidance about the future. And all the big techs, Google, Facebook, have warned about future growth will not be sustained. But I'm not necessarily buying into all that because of COVA. And COVA is still around. It hasn't left. And I do, yes, Amazon, people have ordered over the last year and a half more on Amazon because of can't get out to stores and such. But I think that trend is going to continue. The day of going to the shopping mall or the big box stores is over. So Amazon does swing. And it swings usually for about 10 to 15 days each time. It's just about 30 or 40 days. And again, about another 30 days. And what you do as a swing trader, we try to capture these swings, these peaks and valleys. And we try to find indicators to do that. This is the visual indicator. It's a perfect indicator. It's a zigzag. And it uses the future to paint these perfect lines. And I use these prints to paste my Fibonacci. A lot of people hold Fibonacci, and I like it for the 50% retracement. I believe in that theory, 50% retracement theory. Whereas once it goes up, it'll retrace back to the 50% line, which it did, and went surpassed that at the moment, Amazon. Here's the 50% line right here. You try to find some indicators that actually predict these peaks and valleys. And this is the RSI, and once it goes above the 70 and comes back around. Once it comes back around, that can predict a downtrend. And likewise, going below the 30 and come back around, it can predict an upward. And it did it over here as well. My RSI is set at 4. RSI 4 is quick. And this is the MACD, the zero lag MACD. And this is the stochastic RSI. I use all three of these indicators. Well, anyway, we had a down signal from the RSI a few days ago, and boy was it right. And now we don't have an up, but I'd like to buy. And it's because when you have a gap like this, it tends to come back up and fill that gap over time. Let me spread this out a little bit. And what I think it'll do at some point in time, this RSI will come back around. We'll get a green dot. And the stochastic come back around. It might be 1 or 2 days. It's not going to be very long. And I think that Amazon will come back up to at least here, but definitely to the 50%. I believe that. So how to make that happen? I can't afford to buy a share of stock with a small account. I'm going to use some option plays. But before I do, I want to go ahead and see what really happened to Amazon and whether it's still overpriced and overvalued, and what other analysts say about Amazon. Let me do some fundamental investigation before I come back to the technical implementation. And the reason why I like, by the way, the reason why I like swing trading is it's 75% technical. You use charts, programming, and that's my background. I'm a programmer, and I like the probabilities and the numbers, and that's why I like swing trading. But you really need to know something about the stock. Well, let's investigate that. Amazon does swing. Some people will say it's trading in a channel, but I do believe Amazon will be the stock of the decade, or one of the stocks of the decade. But I do also believe that the growth will be slow over the next 10 years. But it's going to grow in an upward trend. FinViz has a target price of 42.41, way up in space here. Oh yeah, didn't they just go to space with Bezos? It's profitable. It's going to be profitable in the future. Shortable and optionable, that's what I like. And it does have a buy rating, according to FinViz. Looking at the articles, all these tech stocks really did do a good job this week in reporting their earnings. And they were all impressive, but they all gave warnings as well. And each one of them dropped, especially Apple. And Apple has a very, very bright future. I don't believe this. I don't believe the pandemic boom is over, but lots of people do. And all these techs are going to have some problems with their processors and the shortage of the processor. It is expected to go into 2022. Not a good situation. I like to check out tip ranks as well, and they're saying 42.39, just like over in FinViz, about the same. And they're listing it as strong buy, and over 30 analysts cover this. It's very popular. Of course, it's got a ranking of 10. Everything is green. Everything is happy. Over a bar chart, we're looking at the most active options, and there's Amazon. Call over puts. And you want to see more put action than there is call action, but if you think it's going to go up. A lot of people think it's going to continue down. What do you think? Leave your comments below. Also, like and subscribe. And remember, this is not advice. You must do your own due diligence here and make your own decisions. You're responsible for your own trades. Checking out Simply Wall Street, and this is a snowflake, by the way. And you want the ideally, if you're going to look for the super stock, you want one that is all green. This fills it. The general health of this company is good. Past health of this company good, and future. Now, whether it's a good value or not, they don't have it green, and the dividend. We'll check those out. It says it's trading below its fair value. That means there's room to grow. Earnings are forecasted 28. That's a lot less than it was. That growth was this past year. Yeah, right here. I didn't read that, but here it is. It grew 154. This is not the same number. Amazon has got a lot of cash. There's no real risk. Some comparison companies, and I like JD.com. I also like Alibaba, and I haven't looked into this company, but I've heard of it. According to Simply Wall Street, the fair value, market value using free cash flow is $5,000 a share. Currently trading at $3,500, $3,600 a share. Lots of room if you believe this. There's the growth chart, annual earnings and revenue, and this is the company and the industry. This company leads the industry. So these numbers all look great for a buy, and that's what I'm aiming to do. I said that this short was overhyped. There's value in the stock. It's the leader of the industry. It's definitely leader in the market. This is a strong company. This is not one you want to forget. So we had the hype and the scare. May come back down below, and I'll show you what I'm going to do with that. But I'd like to buy this stock either to Monday, Tuesday, or Wednesday when the RSI comes back around. Let's set that alert right now. Add alert on the RSI. The RSI 4, that's what I told you I was using. It's crossing up above what? 30. If I'm anxious, I'll set it down to 25. And I only want it done once, and I want to notify on the app, which I have on my cell phone. And I don't want email or a pop-up. And now I have an alert set, so when this thing comes around, I'm going to make a decision. And that decision is I'm going to go long with the hopes that it'll close out above 3330 by September 17th. And if I do, if that happens, I will make $4.95. I have to put $1,000 up, but that's a lot better than putting up $3,000 for one share. And I can make this amount of money. That's cool. Max loss in this trade is $500. So it's a 1-for-1, putting up $1,000 with the hopes that it'll trade above $3,330 and be above that on 17 September. But I don't like to trade that much, that long, for that long period of time. That's a long time. I just like to give myself room to get there. And in about 10 days, if it's trading a little higher than that, I can take my profits of about 100. And 100 is enough for me on a $1,000 investment. That's 10% in about 10-15 days. You see that? This is what I win if the stock price comes up $33.70, $100 in 10 days. $33.70. I need the stock to stay above $33.25. That's the trade. You know, try option strat out. It's a free tool, very cool, and I'm using the bull put spread, which is a bullish play, bullish option play. It's an intermittent play, and it's not that hard to do with any of your brokers that you might use. I use Interactive Broker, but a lot of people use Robinhood or Webull. You can easily do it with those platforms. So based on that play, I needed to stay above 33.25, which is about right there. Maybe it's a little below that, but for the duration. And if it gets up to 33.70, this is 34, 33.52. Let's just say if it gets up to 34 to this or more, I can pull down $100. So if it's above this level in 10 days, I got $100. I think it's going to fill all the way up to here in the 45 days. So I got plenty of time to get there and plenty of room to think that I think it's going up. I don't think it's coming down. What do you think? Do you think this right from here on is going down or going up? And if it goes up, I'll win something. As long as it stays above 3325. 3325. Well, that's the play. Would you risk $500 to make $500? And here's the losers in the same 10 days. That's what you'd lose if it went down below. I always take a reevaluation of this and see how things are going in definitely 10 days. But this trade will stay warm for a couple days until I get that alert, that RSI alert. So I'm going to be waiting. This is a play for me for Monday, Tuesday, or Wednesday when Amazon stops bleeding, and I think we have clear blue skies ahead. What do you think? This is my trade. Bull put spread. It's a bullish play. It's a gap fill, mean reversion play. It's an intermittent play. Excuse me, not intermittent, intermediate play. It's not a novice play, and you have to have about $5,000 in your account to do these kind of plays. You can do with less money, but you know, one loss really wipes you out. Remember, do your own due diligence. Happy trading. Catch you on the flip.